Welcome to Trading Lounge and the European indices, and starting with the DAX here. We were looking at this as wave 3 here, as you know, then an A wave here, an A and a B and a C wave here for wave B, and then we're looking for wave C or 4 down through here in 5 waves down through here. Now, I don't have enough evidence to call that in just yet. We've also still got the count where this wave 4 here can be in over here, and the whole move up here can be wave 1, and we'll be looking for an ABC coming back. The standard would be the 50-60% retracement level, but I don't think we should sort of pin our hopes on that as such, but that's where it is here. We'll need to in fact, what I should do with that is just put that over here, drop that into here, pull that into here. So yeah, either one of these, and either way, we're not going to miss anything. So now we've got our first high above the level here. That's our trigger. Now we may get another trigger a little bit later on. This might pull back up here and so on, and we can bring that down and down and down. For the long side there. We'll also need to do this for the short side here as well. Okay, so with that in mind, let's move in and have a little look at this and see where we're up to with this particular count. So at this stage we were counting the top up through here in the last little 5 waves, and it dropped quite quickly here, as you know. And that's all good, but the move down here so far, if I can just borrow one of these here, it's only in 3 waves. Now this can change, of course, but as it stands at the moment, that's an ABC. It could be a situation where, if I can just copy that, this move down where I've got the A wave can be wave 1, and little wave 2 into here. And then the next move down here can be wave 1 where that C wave is there, and then we can come back up here for wave 2 and then move down from that point. So a corrective rally into here and then down from this point here. Now, we don't have to worry about long trades just yet, but if this market finds support on 13,000, then we know that we're in a corrective move at that point, because this is 5 waves down to this point here. And then we've got a correction, then we've got another 5 waves down. So if the market for any reason sits on top of, moves back up and sits on top here, then it's overlapped this structure here, and then it makes that there an A and a B and a C. So then we have a corrective pattern. It doesn't mean that the corrective pattern is finished at that point and we go straight up from here. It's possible, but it will be more likely that we have a larger correction here. So we're still in the early throes of it all here. But our takeaway here is that if I can just configure this here at this point, so we've got this here, it's just a matter of time working with it really, and then this low here. It's normal for the market to drop down and come down into number 8 here and then retest 13 again from that point. So we just need to keep narrowing these bands down through here to capture the trend. So this one keeps continuing down. This one should be able to continue up here. So we should be able to, kind of get not a triangle pattern, but basically the highs and the lows here. One of them will eventually be triggered at that point from there. So this is just the hourly chart here. So we've got 1 and 2 and 3 and 4 and 5 to here. So we'll see. We need to work out what the first leg is. If you're short already, well then that's fine. Stay short and leave the stop above the 13,000 here. The other point here is that the market can come back up to this point here too, because if this is 3 waves here, then we can have an A wave, a B wave, and a C wave coming into the 61.8% mark here, and then having another 5 waves down through to here. So there's a lot to go on just yet, but the main point is that we'll be looking to go long above here. We'll be looking to go short below here. If the market takes this top out here, then we don't have an impulse wave to the downside at that point, and we need to readjust what we're doing at that point. And this is the same for the other markets as well, the AEX here. Well, we can bring that down, we can bring that up to here, and we can bring that down to here, okay? And we bring that down further. It's also too that if this top gets taken out here, then it makes this a corrective wave. Then the rest of this is, whatever happens is going to be corrective in here, and then eventually it will move up from that point. So yeah, we just got to basically just wait it out and see what we've actually got here. So the move down here can be 1, 2, 3, 4, 5 for the A wave, or wave 1, ABC for the B wave, or wave 2, or wave C down here, or wave 1. So wave 1 here, wave 2 here, wave 1 here, wave 2 here, and then down for wave 3. So really we want to short below this. There will be a bounce on the 560 there, so it'll be a bit of a rough sort of re-entry, so to speak. So you may be able to get that a little bit higher up in here as well, but yeah, taking that low out here is the definitive point. And of course we need to put that up here as well, just for the time being. You know, we could put a trigger here as well above the wave B here, but we could get trapped into some type of larger correction here. So down for an A wave here, B wave here, C wave here, and then up, you know, if that's breached here. So going long here is not such a good thing at this stage, okay? The other point here too is that when a market enters group 2 here, subgroup 2, which is 65, 72 and 80 here, once it enters that, it normally stays in there. So for it to drop out and fail at 72 here means that there's something, you know, there's something wrong at that point. So yeah. So yeah, let's just see, let's wait one more session to get some clarity on this, but we know where our triggers are to be on the short side, and this is the same for the FTSE as well. So in the FTSE here, last time we spoke, we were looking for going short right in here actually, and because the market never had a correction at 7.8 here, as I mentioned, the distance above here because it didn't have a correction here, I call this the overshoot pattern, where it doesn't stop, it just goes all the way through. So the distance above that it goes is normally the distance below it goes, is a bit of rule of thumb here. But this is the same pattern. We've got 5 waves here, and then we've got this pattern here as well. So it can certainly move up to the 61.8% mark and then move down from there. So we need to put that in there. Here. So once again here, so you stop at this stage. Need that, you know, if you've gone short here, then well, it just depends on how you trade. I mean, everybody's doing something different, aren't they? So, but for the sake of actually moving down here further, then this will be the trigger to go short again here, or even the other point you can do here as well is once you've got the B wave low in here, then you can swing that to the upside here and get a little bit closer to the price at that particular point. Okay, I'm just going to leave it at that. Thanks for tuning in. Appreciate it. Cheers.